I'm Philippa, CEO of Paradigm Norton, and this is Life Matters More, where we explore ESG, sustainability, and the future of business. Today, I'm joined by Amelia Tan, Head of Responsible Investment and Stewardship at Legal & General Asset Management. Amelia leads the integration of responsible investment across one of Europe's largest asset managers, shaping how trillions of pounds are invested in climate culture and long-term sustainability. She brings a global perspective with experience at BlackRock and Citibank, an MBA from Cambridge, and a clear passion for driving meaningful change through active ownership, policy advocacy, and credible net zero strategies. Amelia has been a leading voice on the role of investors in setting targets, aligning portfolios, and escalating engagement when companies fall short. Amelia, it's such a pleasure to have you here. I am looking forward to exploring your journey, your vision for stewardship, and what it really takes for investors to deliver on their promises.
Thanks, Philippa. It's lovely to be here. And thank you so much for having me on your podcast.
Oh, I've been so looking forward to chatting to you. But let's start at the beginning. So you have had this incredible career. You've worked in Singapore, London. You worked for global platforms like BlackRock before joining Elgin. Tell us what first drew you into irresponsible investment and what keeps you going.
Sure. So I was in Singapore at the time of the global financial crisis. And at the time, I decided to take time out of my career to do an MBA in the UK at Cambridge, really to gain a global perspective, not just on financial markets, but also on the world's economy. And after that, I joined BlackRock, and sometime in, I'm going to say 2015 or so, we had established at the time the sustainable investing team. And I think what really struck me about the emerging concept of sustainable and responsible investing was that it wasn't so much a niche avenue anymore, and that, and that it was becoming mainstream. And actually, I thought that the idea of making mainstream finance a force for good was really inspiring, given everything that had happened during the global financial crisis. And what I've also, and I think what continues to inspire me, is that financial and sustainable outcomes are not mutually exclusive. In fact, they can be mutually reinforcing. And I think that is what keeps me going and engaged, at least in this space.
Yeah, you know what? I just think I think it's really exciting. I think there are a lot of people out there who perhaps believe that it's one or the other, that you can make returns or you can do good, and that they have to choose. And actually, not everybody can choose the good over the returns. So I do think it's really exciting we're talking about this. So let's talk about stewardship and engagement. Not all of our listeners will know what stewardship and engagement is. So could you give us a bit more information about what it actually is?
Sure. So in the UK, we have the UK Stewardship Code. And so I thought it'd be helpful to share what the definition of that is in formal terms. And then I can talk about what that means actually in practice. So the UK Stewardship Code defines stewardship as the responsible allocation, management, and oversight of capital to create long-term sustainable value for clients and beneficiaries. Now, what that means in practice, it's really about, as stewards of the assets that we hold on behalf of all of you as investors, we are engaging with stakeholders across the economy to address issues that may materially impact financial outcomes for investors, particularly in companies that we invest in on behalf of our clients. And so in terms of how a lot of what I've experienced, I would say, over the years, and my background has sort of shaped the way that I approach these today, I would say that my background has really given me an understanding of the intersection of financial consideration and sustainability outcomes, which therefore has enabled me to raise the bar of how sustainability should be integrated into stewardship and investment decision-making, And I hope that that also then contributes to industry standard setting of what we should be doing as responsible investors in the industry.
So, stewardship is taking responsibility, it is owning things, it is working with companies to make sure that they behave differently.
So, on a day to day basis, it does mean that we engage with companies to understand how they are addressing material sustainability issues to their businesses. It does mean encouraging them to take action where it is beneficial to their stakeholders, including us as investors,
Hmm.
over not just the short term, but also importantly over the medium and the long term. Because ultimately, when we think about who our clients are and who the beneficiaries are sometimes of these decisions, um, we are ultimately really long term investors. We're there for the horizon. It is our savings, it is our pensions. So it has to have longevity in terms of value. And because of that, when we think about what we're asking of companies, we're not just asking them what makes you successful and profitable tomorrow. It, it is what makes you successful and profitable over the long term. The other thing that we do when we talk about engagement is also the fact that we have shareholder rights, which is how we exercise that. I would say is through voting on the resolutions that are put forward at companies' general meetings, and this can be anything from whether who is the chair of the board to how are executives compensated and remunerated for their activities and their businesses. Um, could be also things like their climate transition plans. So, how are they equipping their businesses in the context of climate change over time? Now, we don't just engage with companies because ultimately, when we think about the broader ecosystem that companies operate in, we have to understand, therefore, that there are other stakeholders that we have to engage with. And so we would engage with stakeholders that we believe have influence and can influence companies' actions. So, for example, public policymakers and regulators, effectively governments, so that they can provide a conducive policy environment for companies to be able to address these issues.
I just, so as a fund manager, I would expect most people didn't think that you did that kind of stuff, actually. So you are engaging with policymakers, you're engaging with the companies themselves. I mean, who else is on your list of people to chat to when you're trying to work through your stewardship and engagement priorities?
Yes, indeed. We have, it's funny, we have to also be creative about who we're engaging with, right? For example, we're not just talking to governments, we're talking to stock exchanges when they're thinking about their listings, for example, or what are they asking companies to disclose. We talk to advisors who advise companies pre-IPO on how they should be considering, the structure of boards and whatnot. So there's a lot I think that we try to do in order to effect change at an ecosystem level. Because
Yeah.
ultimately, you know, I suppose you could say no man is an island, but in this context, no company is an island. And so there's a lot of stakeholders, dependencies, whether it's in the general policy environment to the aspect of the demand aspect of the value chain to the supply
Mm.
aspect of the value chain of any given company. And that's why we try to take a holistic approach to our engagement and stewardship.
And I mean, you're in a pretty great position. I mean, legal and general investment managers are what, the biggest fund manager in the UK. So when you go knocking on their door and say, "We want to talk to you about your climate policies," are they? Do they open the door? Do they sit down? How are you finding that they are engaging with you?
It certainly helps that we have scale in our throughout the assets that we manage. And because we tend to be one of the, let's call it top 20 shareholders in a given sort of shareholder register, they do seek engagement with us. I think there are a range of company attitudes, I would say, to the topic of climate. because ultimately we have to think also about the context that they're operating in, and they have multiple stakeholders, multiple issues to address. And so when we are speaking with companies, we do try to ensure that the topics that we're engaging on are the most material issues that we believe are to the company's overarching long term sort of profitability and value. So sometimes companies have more pressing short term issues. And so they would see this as, okay, yes, we would love to do that, but we have limited resources, limited time. And so for us, it's that balance of how do we engage on both the near term issues that they are facing and the long term issues that we believe are potentially have significant financial impact on on their businesses.
So more sort of collaborative than wielding a stick, as it were.
Well, one has to balance that. So it can't be all stick and it can't be all carrot, and it has to be both, because ultimately, because we are long term investors and primarily because we invest so much via our index tracking strategies, where we can't always divest from these companies if they are in the MSCI World Market Cap Weighted Index, for example, a benchmark. So we're there whether we like it or not, and therefore we need to work with companies to see what the right and the optimal outcome is for businesses. But at the same time, we have to hold them to account, precisely because we don't have the option of walking away. We can't just divest from them. And so there it has to be a balance. And most of the time, the most productive relationships, frankly, are one of effective partnership, but they understand that we're there also to hold them to account. And I think it therefore has to be a balance of both.
Have you seen attitudes change then when you were talking to people about the sort of issues that the investors really care about? So, for example, here at Paradigm Norton, we have our responsible portfolio where we work very closely with you because you engage in this stewardship and engagement work. Have you seen the attitudes of boards change over the period that you've been there and working and driving this agenda around stewardship and engagement?
Sure. I think, and this really sort of harks back to what I mentioned earlier, that companies operate in what is a very complex uh, environment. And so, certainly over time, I think there are some issues that have been sort of easier to talk to companies about because there were more favorable policies, more favorable sort of momentum, let's call it that, towards these various issues. For example, with climate change, right? So I think, you know, I would say up until recently, it was clear that all of us, as in the entire world, we're all trying to work towards the same outcomes. Now, clearly, there have been a lot of near-term um, events that have sort of challenged that momentum. And so companies are sort of sometimes taking an approach of, hold on a minute, we've got to take all of these near-term issues into account. So therefore, maintaining that linear approach isn't as feasible as we would all like it to be.
Hmm.
Having said that, there are also very fundamental issues that stand the test of time, right? And things like shareholder rights and ensuring that, we are incentivizing executives through the right remuneration structures, having the right sort of effective board governance. Those stand the test of time. And so, from our perspective, um, we are I would say interested is perhaps an understatement. We are very focused really on how we address these sort of long-standing um, classic issues that we as investors should be concerned about as well. So we have been unwavering, obviously, in terms of corporate governance related issues. We are unwavering in terms of what we would like companies to do from a net zero transition perspective and climate change mitigation perspective. But at the same time, we are cognizant of the short term potential issues that they're facing. We are worried, frankly, about um, whether the world is in a position to meet its net zero targets? And if not, therefore, what do companies need to do to adapt their businesses in order to be resilient in the context of increasing, for example, physical climate change risk? So, all in, I would say, steadfast in our ambitions, but we have to be also sort of flexible in understanding how to meet those ambitions over time.
And do you help those firms, those companies with those the tricky balance of trying to work out the almost what can be competing priorities?
I think one of the ways is by maintaining our focus when we are engaging with companies on these are, we believe, the top issues that are influencing or the impact on your sector and your businesses. So maintaining that sort of focus on the issues that we believe matter to the businesses and are financially material to them. But at the same time, we also recognize that they don't sit again in isolation. And so we are thinking more and more about how do we address the value chain in terms of how companies within their value chain should be engaged with, and who in their value chain we should be engaging with, so that we can again make things easier, right? If they have more consistent demand, for example, for clean energy solutions, then they would be certainly more interested in producing that. And so that's the type of relationships that we are trying to foster here, which is the demand and the supply has to sort of go up in tandem, so that there is much more incentive and a virtuous circle, I would say, of productive sort of approaches to meeting these systemic issues.
Yeah. Wow. Okay. Um. But what I mean, what happens? What do you do when companies aren't engaging with you? If you're and I mean, sometimes people can characterize engagement as a bit of box ticking. It doesn't really mean anything. Nothing ever actually changes. So what does meaningful escalation mean to you when you're not seeing the changes that you want to see?
Sure. I think the word engagement or engaging with companies it's sort of such a simple word, but it actually underpins a whole range of tools that we could use, or the approaches that we could take when it comes to engaging with companies. So when one says we engage with companies, the immediate sort of assumption here is I'm directly talking to one company, just me, one investor talking to the company's CEO, board chair. But actually, that's what I would call a direct engagement. There are other ways to engage and to escalate. I would say if we find that companies are not responding positively to our direct engagements. One approach is, for example, collaborative engagements. So we work with other like-minded investors who are also looking to, for example, raise best practice standards in the industry across certain sort of different companies. So collaborative engagements are very helpful because they demonstrate that it's not just one investor who's worried about this. There are many investors who are also concerned, for example, about a specific issue. Um, and then the other avenues would be through shareholder proposals. In the past, I would say this has been used much more extensively in the industry. The last sort of proxy season has seen less, but it is still a meaningful engagement tool where it raises the profile of, again, the issue that we're trying to address at specific companies. Um, there is also a way of ensuring that our voice is heard in the public domain, so that companies understand that um, you know there is interest not just from investors but the broader sort of market. And so whether it's through sort of, for example, what we disclose on our websites to the media, that can be a way of highlighting to companies sort of the concerns or issues that, again, we believe the companies should address. Voting, certainly a fundamental tool for escalation in terms of, really telling the companies very directly how we feel about some of the resolutions that they've put forward. And last but not least, capital allocation. So we can decide if all else fails, should we then therefore not invest as much in companies? And that is, certainly an aspect to consider as well in terms of escalation.
So you've been doing stewardship and engagement for a while now. Um, Presumably it's changed over the period that you've been engaged with, then it's developed, the thinking around it has developed, your relationships have developed. I'm interested in knowing how it's going to keep developing. I mean, what do you think is going to happen with stewardship and engagement over the next 10 years, something like that? How is it going to change? Is it going to get more powerful? Will it get more collaborative? What do you think?
So I would say in this current scenario, I think we're facing what is dare I say, a polarized world, with very polarized views and very polarized approaches. And so right now I'm seeing a whole mix of different approaches, perspectives, and activity, frankly, relating to stewardship. I don't know if I can foresee the future, but what I certainly hope is that investors recognize the increasing urgency of critical issues like climate change, and that we are surely running out of time. If you think about sort of what are we trying to do here, we know that there is what one would call an absolute total carbon budget that we have as a world that effectively impacts the warming of our world as we know it. This total and absolute carbon budget doesn't change because of various economic situations or geopolitical issues. It's there. And so, from that perspective, we are running out of time of addressing these critical issues, which means that we will be impacted, like it or not, in various ways and with increasing urgency in the context of all of the physical climate change issues that can arise, whether it's acute, like extreme weather events, to whether it's increasing temperatures and chronic issues that potentially could degrade productivity in economies, etc. So I think what we have to understand, therefore, is with this increasing urgency, because literally time and carbon is running out, then hopefully that lends more urgency with stewardship and what we are trying to achieve with companies as well. So, can't promise that is a prediction, but certainly can tell you that is my hope.
Yeah. Okay. So let's talk about net zero, and a drive towards net zero. I know you have previously said, in order to get credible net zero strategies in place, they need clear targets. There needs to be portfolio alignment, strong engagement. Where are investors getting this right? Where are the gaps? What more can we do? Um, give us some answers, Amelia.
Sure. So we have a dedicated climate engagement program. It's called the Climate Impact Pledge, and through our experience in this, we've learned a lot of things and we've done a lot of things. So one of the things to highlight here about this program is we try to cover both breadth and depth. Breadth through sort of a quantitative assessment of how companies are faring in the context of their transition and climate change mitigation. Um, and the output of that quantitative assessment is a decision on whether or not we vote in line with or against companies. And the good news is based on our minimum expectations across these 5,000 companies in 20 climate critical sectors, we've actually seen an improvement in companies meeting our expectations. And so the percentage of companies that we've been voting against has actually decreased, and it's decreased by 46% over the past year or two. So what that demonstrates is companies are improving. They are on that trajectory. But then, as I mentioned, the problem we have also is that we have this fixed, absolute, total carbon budget for the world. And clearly, carbon emissions are still rising in absolute terms. And so there is clearly a gap here. And the gap is that we're not moving fast enough to reduce emissions. And so, in my view, I think the gaps really are that while we have been very good at engaging with companies on their individual sort of responsibilities, I think we need to address the gap of more stable, conducive policies to support companies in their transition. Frankly, certainty for companies is very important. If you think about big infrastructure projects, they don't have a timeline of 2 to 3 years. Their timelines are 10, 20, 30, 40 years. And so if they don't know where the world is going, they can't allocate resources and capital in quite as with quite the same conviction, let's put it that way. And so they need more certainty from policy perspective that this is where the world is headed in terms of ensuring that we're trying to mitigate the changing climate. I think we, as the world, rather than just investors, we need improvements in technology, continued investment in improving technology, and also we need consumers to increase their demand for these solutions for low carbon, clean energy, clean technology solutions. And all of that will then help scale these up and will therefore bring the cost of all of these things down, which then becomes again an economic sort of virtuous circle. If it's cheaper, why not use it? You see, so and I think that all of that comes into play, but these are some significant gaps that we see at this point in
Yeah.
time.
I mean, it's so interesting. It's always that profits versus purpose. And if you can align profits to purpose, then that's your sort of gold North Star type approach, isn't it? So, I mean, I, I I suppose I struggle with capital markets being aligned with net zero. And you spoke there about, the potential for policy to help with that. And actually, I love what you're talking about there in terms of we as consumers, not just investors, can drive those markets by our day to day spending activities. I mean, what is there a way for the policy to change, like government policy to change for where do you start? Do you start with companies? Do you start with consumers? Do you start with the markets themselves? Like, where should policy go next to help the capital markets align with net zero? Because if we can get that perfect storm going, then we can drive things forward.
Sure. I think one of the key things for us, and it has been for a long time, is about standardization, first of all, of disclosures. And just so that investors can understand, uh, you know, what is it a company is doing? What are the key risks associated? What is the strategy behind how they're addressing their various sort of material sustainability related risks and issues? What are the dependencies? What are the impacts of the way that they're operating on the environment, etc. So standardization of disclosure is very helpful for investors to be able to therefore assess how companies are addressing these issues when they are material. So that's first. Second is a real sort of incentivization and clear incentivization, and also a roadmap for where things are going. So, for example, we can certainly generate more renewable energy, but we need the right grid infrastructure. We can have more electric vehicles, but we need the right charging infrastructure. And so, all of that, I think that when we think about sort of policy, the policy has to be holistic and it has to address the various parts of the value chain in order for it to be successful. So from my perspective, it's really two things: the standardization, the certainty, and roadmap in a holistic sort of way.
And what about culture? So we've talked about net zero. We've talked a little bit about governance. How does culture of the companies that you're investing in, I mean, is that something that you care about? Is that something that's part of your due diligence? And if it is, how on earth do you assess the culture of the company that you're invested in from the outside?
Sure. So I mentioned earlier that we are largely index investors. We have obviously a very strong active book of business where we pick and choose the companies we want to invest in. But a lot of the time, we're also invested across, again, market capitalization weighted indexes, indices, benchmarks, and whatnot. So your MSCI World, your FTSE 100, that sort of benchmark. And if you think about that, that means we are meant to cover something like over 10,000 companies. So looking outside in, it's going to be very hard, frankly, to assess culture in that sort of holistic sort of way. So what we do is we take cues, right? We have some sort of indicators of what we believe would help enable a company to have a healthy culture. So there are some obvious ones like diversity and inclusion. Sometimes that's a bit of a shorthand. But ultimately, we do believe that diverse boards, diverse management, diverse workforces um, enable companies to have more effective decision making, more representative decision making, frankly, of their customer base. Um, and diversity tends to be fairly simple to measure if we can measure it, right? So in many ways, sort of diversity and inclusion, that context, I think is quite a helpful starting point. And then we get into sort of other aspects of human capital management, whether it's around sort of ensuring that the workforce is educated and enabled and empowered to have the right skills that are appropriate to the evolving sort of company environment and what they're trying to achieve in terms of business strategy, labor relations. Frankly, not having the right labor relations is a big risk, right? It manifests itself in workplace disputes, strikes, employee engagement. An employee workforce that is more engaged means better productivity. Um, so I would say that there are a number of these key indicators for us in terms of both human and social capital management that help give us an idea of a company's culture. Because actually, to measure and assess company culture like that is just, frankly, very hard across so many companies.
Very hard, but very necessary. I mean, do you feed back to those companies if you're looking into them and you think, this company is a disaster? Do you ever go? Do you ever go back to those companies and say, look, we would invest in you, but actually these are some red flags that mean that you haven't passed our threshold.
Absolutely. I would say certainly we have very sort of clear policies, for example, on diversity, for example, very simple one there. And we have minimum expectations, especially around diversity in boards. And if those aren't met, then we would, for example, escalate that to a vote against companies in terms of, how they're actually establishing and maintaining their boards. Then there are other more sort of possible engagements that arise out of controversies, for example, where we have found that companies are embroiled in sort of very significant controversies that are systemic in nature, that potentially have a significant impact on the company itself. And we would then therefore engage with companies. And of course, if we have significant concerns about um, about what's happening in those companies, then that would feed in to how we think about them from an investment perspective and whether or not we want to hold as much exposure to said company if they are embroiled in all of these various controversies. So
Hmm.
it all links in. So yes, we would absolutely engage with companies if we find that they are are embroiled in such potentially bad controversies.
Good. Um, all right. So I'm going to give you the opportunity now to issue a call to action. If you could issue any call to action to any business leaders who are listening to this today, what would that call to action be?
Sure. I think the first thing I would say is the premise that we are coming from is that we are acting as long-term investors on behalf of our clients. And so we are very much aligned in our interests from a corporate and an investor perspective in ensuring that the businesses remain profitable over time. So when we talk about sustainability issues, our interest here is about ensuring that companies can stand the test of time, climate change, socio-demographic changes, etc., over time. And so my call to action for business leaders is that when they are considering strategy, to not just consider near-term profitability, but really long-term sustainable value. And that is what we as long-term investors are interested in.
Yeah. And I mean, what's good for long term investors is good for the company, is good for the world, hopefully. So I thoroughly commend your call to action there. All right. We have some quick fire questions for you before we bring this podcast to a close. What is the most inspiring responsible investment initiative that you've worked on?
This is not one I can take credit for, actually. And I would say this is absolutely something that um, we as a firm and a number of key teams have worked on that I really can't take credit for. But I find it really inspiring. So I'm going to talk about it anyway.
Great.
And that is our approach to our climate action strategy, which is ultimately about investing not in the leaders in climate, but actually, in many ways, sometimes the laggards in climate, and using deep and purposeful engagement to demonstrate to companies the value for accelerating their transition and therefore leading what we hope to be a valuation upside for people who are invested in those strategies. So that for me is really inspiring because we are absolutely bringing together what we believe to be strong sustainability outcomes for strong financial outcomes.
Yeah, I love that. I think often people think about sustainable investment as being investment in sort of these super new green companies and not necessarily the companies that we still need, but who need to transition into, greener practices. So I love that. A book or a thinker that has shaped how you see sustainability.
So I don't know if this is gonna be so like cliched or something. But I have to talk about David Attenborough. I think I mean what he has single-handedly done to raise the issues around how we treat our world is incredible. Um, but also he's done it in a way that is not just it's emotive but not polarizing. He's
Mm.
done it in a way that is unifying, and I think that is so incredible to be able to do that. And so I would like for and that inspires me, I would say, in terms of how I want to approach sustainability. It's about a unifying force as opposed to a polarizing force. And I take inspiration and I would want to mirror that, but obviously that's a very big, I don't know, that's a huge like ambition, but
I
he
just
is incredible.
I don't know enough about penguins, I'm afraid, to do that. I'm gonna have to watch the programs instead and try and do something myself. One myth about ESG that you would love to bust.
Ah, this is simple. So, my pet peeve, I think, is that everyone thinks that ESG or responsible investing is about exclusions. And frankly, that is the least favorite approach of ours. Like, that's a measure of last resort. Ultimately, we want companies to succeed. We want to engage with companies. We want the right outcomes for stakeholders across not just shareholders, but obviously local communities, employees, etc. And so to say that exclusions um, enables that is it's sort of counterintuitive because you can't engage with a company if you're not invested in them. So it's not just about exclusions, I would say, and that should be a last resort.
Yes, yeah, I thoroughly agree with you. Isn't it a really interesting philosophy, isn't it? Whilst I get that for some people investing in particular sectors may feel not right. Actually, when you look at the impacts that you can have when you're working with those companies to try and drive their behavior, as opposed to, if you're not going to invest, then probably somebody else will. Um, a deeper look at that, I think is absolutely right. That Do we exclude the naughty children from school, or do we work with them to try and bring them into the classroom? And of course, we want to work with them.
I might
Okay.
steal that example actually. It's a good example.
What excites you most about the next 10 years of responsible investing?
I would say it's frankly it becomes even more and more relevant um, as time goes by because again, like I mentioned, the issues become more and more urgent. And from my perspective, I think that is perhaps the most exciting part of responsible investing. It's that my hope is that it has been quite hard, frankly, to ascertain how financially material some of these sustainability issues are. But as you start to see the kind of damages that can be incurred because of all of the issues that we're facing in terms of, for example, climate change or degradation of nature, for example, people will better understand the financial impact of these issues. And that means, therefore, from my perspective, that it should naturally be extremely relevant to any sort of big strategy decision making. And then it becomes even more relevant over time. And I think that for me is exciting. A better understanding of how these issues can impact financial outcomes, which will therefore make companies much more attuned to the challenges that we need to address.
And finally, Amelia, you work so hard in your role, but how do you switch off when you are not driving stewardship and engagement across the globe?
Wow. I think I think I'm very lucky. I'm very fortunate because I live in basically uh, England's garden of Kent, and so I think going back to the countryside after a long day at work in London, um, it just immediately just that green fresh air it just such a quick sort of change. I think in pace, in priorities, um, and it gives me sort of it just it allows you to decompress so quickly. I would say. And that gives me then therefore the energy to focus on my family and my two kids who are very boisterous and energetic and actually frankly possibly even more tiring than the work itself.
It is. It's surprising and not surprising how many people say to me when I go to switch off from this world of work and driving ESG and responsible, you know, considerations through businesses, how many people say spending time in nature. And I think that kind of brings us full circle, doesn't it, to all those questions about biodiversity and net zero and sustainability and the whys and the wherefores of why we do this work. So, Amelia, thank you so much for joining me on the podcast today. I have loved talking to you about the work that you're doing in stewardship and engagement. And there's a reoccurring theme for me in a lot of the conversations that we have on this podcast about asking good questions, about keeping curious, about saying, I want more from this than just profits. I want more for the future. I want us to think about the long term sustainable nature of the world around us. So, to my listeners, thank you for listening. Keep asking good questions. If you know anybody else who would enjoy this podcast, please let them know and subscribe. Thank you so much, Amelia. It's been a joy.
Thank you, Philippa.